Welcome back to the channel, everyone. Chuck for Options. Thank you for coming back. I would like to just let you know that I really appreciate your likes and your subscribes. Please keep them coming. Please share with everyone you know. Just shoot them the link to the channel. There's some really cool tricks in the market in which you can make some extra passive income within your trading or investing portfolio. All right, now everything that I'm doing and I'm displaying is just for educational value. I'm a dumb bum myself. I get really lucky. I have gotten really lucky when it comes to the market. Okay, let's get right into it. All right. This is not financial advice. This is only, this is for fun. Call it what you want. You don't have to use your real money. I'm using my real money. Maybe if there's a play that you would want to show me or explain to me, maybe we can do it. We have to choose the right product to do it on, but let's do it. Let's make this an interactive thing. All right, so moving on, okay? So this week, what I want to do going into December is I want to show you 3 really good Reits that I've been following. I'm very biased. They haven't paid me, but I have made money from trading the stock and trading the different options. All right. So the first one that I want to get into and I want to introduce you to is WES, Western Midstream Partners. Okay. So I go back actually back in maybe, I want to say June with these guys. Okay. No, April. All right. So I've been trading with them since April. So how did I get in touch with Wes? I was looking for a passive way to really get into the market a little bit deeper, and I wanted to do that through dividends. So I bought a couple shares, and I got a good amount of money off of the dividends. I spent, I believe it was like $56, and I got like, there we go. I got $3 off of that dividend. I was like, wow, this is like a big deal, Here we go, $58. And so off the 10 shares that I got, I was like, wow, like this is like a really good dividend. This is like a really good buy. This is going to go up, So another thing that I did was I bought a option contract because I figured, this is going to be was easy, So I figured, let me buy more. Let me buy the contract. Okay. I went deeper into the rabbit hole. So I'm just showing you how far back I've been really dealing with this particular asset. All right, so we're going to go deeper into your dividend history quarterly. All right, so you're going to get paid 4 times a year off of this particular asset. There's always going to be risk, especially risk in options. When you hold a stock, okay, there is no expiration date. When you write an option contract, there is immediately an expiration date, and your Greeks are going to come into play, and that's going to drive your contract, either up or down. But generally, when you write your contract, maybe a month out, 2 months, 3 months out, it's going to have that curvature, But when you buy a stock and you hold a stock, that's when it's less risky. All right. My incense. Now, my second pick is called AGNC. It's a really good company. Now, how I got into this company was I wanted to check out their dividends, of course. I want passive income. I want to be able to, sit back and grow with the company and grow with the dividend. But this is one guy that I looked at. I like the option chain, and I also like the fact that you get paid once every month on AGNC. This is right here in Maryland, real estate. It's a REIT. All right, it's been doing really well. So let's get into the rabbit hole on how did I get into it. oh, I have a dividend pending. That's always good. I got some bread coming in. I'm talking about bread, making bread. That's what we do. To AG&C in June. All right, I bought 100 shares. And then I immediately, well, not immediately, later on, I sold a covered call. All right, so limit, sell, open, effect, open. Okay, now that's just telling you the type of contract. What did I do? I sold to open. I sold a covered call. Quantity, how many? Boom, 1. How much did I get? $150. What did I do with that money? I threw it away. I probably wasted doing something stupid, okay? But the big thing that I wanted to do was off of that $1,300 that I put in, I made $12 back. I don't know why I was so happy about that. Well, multiply it. 12 times 12 is 144, okay? So I'll take that off of that investment, and it can go up in value, and I can write cover calls. Listen. So what I did was exactly that. All right. So I probably, rolled out of it. It probably got called away or something. I kept the premium. I sold it. I don't know. I was just rolling it along. And then I probably seen something else, and I went to another product. Okay, this is how it is in the beginning, I guess. Let's go deeper into the dividends. All right, so here's how often you'll get paid. Boom. Count them up. Count them up. It's going to be 12. All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right, you get paid 12 times a year. So at that particular price point back in 19, it was much higher than this. And look how much you were getting. You're getting 16 cents a share. All right, you multiply that by 100. You're going to move that decimal point over, and then you're going to multiply that by 12. All right, do the math. I'm not. All right, so this is why I got into this company. This is like a really big deal for me because you have a trifecta going on, okay? You have growth, you have covered calls, and you also have dividends, okay? That's the trifecta, all right? My third and final REIT, okay, that has been taking off. My one boy, I put him down on this, and he's always hitting me up. He was like, bro, thank you a lot for, hitting me up with this, So this is like another guy right here that I got into. Again, this is biased information that you're getting. I put money into this. I put bread into this. My own bread, so, do what you want. You can take a look at the dividend yield. That's a big deal. And actually, the PE ratio is a big deal. All right, so when you look at the different companies. Now, another thing too, when it comes to dividends, all right, when you look at the different companies, there's a certain range in which you want to target, all right? So the range for like a safe dividend is probably somewhere from like 4.5 to 7%, okay? Anything higher than that is kind of risky, and the company and how you'll get paid, maybe in the structure of their dividends, the frequency, that can change up. So just be kind of weary on where you really, check out your dividends, all right? I got into this company on the 20th of April, all right? Again, for the dividends, all right? That's what I want to do. That's not always the case when it comes to investing, but I'm a trader, although I do have a long-term portfolio, And I would hope that if you are in the market, if you are a trader or investor, you should have a long term, okay? Get it? It's protection. It's protection. All right, so what did I buy here? I bought some calls for a contract, $50 each. All right, I bought some more shares. I guess I was really liking what this company was doing. Oh my gosh, I hope I made some money. I sold one. That one sell looked like a panic sell, a scary sell. Yeah, yeah, panic, scary. Yeah, yeah, all panic, all panic. Yeah, yeah. You see, but that's the good thing about the market, you know. I hedged out of it. I hedged out of it. The shares, let's do some math. 90 at 286. Okay, 100. Okay, I hedged it. I took a little bit of a loss. It wasn't that big of a loss. What, like, I think I just said 30% in my head. I think it took like a 30% loss, 35% loss. You know, it's cool. It happens. Because you're gonna lose. You know, you're gonna take losses. You know, but this is, but just like I took a loss, my friend, he was successful in his trading with Sanix, and I'm happy for him. You know, so let's check out their performance. All right, let's go to the month. The last month, 77%. Okay, that says it all. All right, so like the past like 2 months, like I said, you know, real estate's been taking off, like low key taking off. Dividends went down. A lot of companies' dividends went down. They went back on them because of COVID. You know, the stock price dropped, so they just can't pay out all this like revenue that they don't have or that they don't have coming in. These companies were the companies that like really, every company in the industry like really took a rock hard hit. So this is one way that I got into the market, and I took advantage of, you know, the March lows, you know, everything crashing. So definitely keep your eyes peeled on the market because things are forever changing. All right. And I would definitely advise you to limit your risk. Now, I'm not a financial advisor, so this is more like a journal. Okay, I'm talking to Chuck in the future. Okay, Chuck 3 in the future. All right, make sure you limit your risk. All right, because you've been crazy. All right, we're gonna redo that margin video, by the way, too. That's crazy. All right, and control our exposure. All right, so. Those are two things that I have to work on as a trader. I would like to thank everyone for coming in today, for taking a view on the top 3 REITs that I've been taking a look at for the past, you know, 3 and 4 months. I'm going to take a bite at them maybe sometimes within the next couple of weeks. Right now, I'm in the middle of a big swing trade that's doing some swinging. So Monday opening up, I really hope pre-market is swinging in the way that I need it to because I don't want to miss out on some potential gains. All right. So once again, I would like to thank you. Thanks for coming to check me out. Check out the other videos I have popping right now. Good luck in the market, and thank you.
That was easy.